Good afternoon. Thanks for tuning in. You're watching Countdown on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. Well, these are the top headlines that we're tracking at this hour. Markets are off the highest point of the day. The Nifty scales an intraday record and remains above the mark of 12,300. IT and metal stocks are contributing to the gains. Infosys remains the top gainer on Nifty. The stock is contributing over 30 points to the gains seen on Nifty. Tata Elixir too has surged in trade after its third quarter results. Net profit for the quarter was up 50%, while margins too expanded. And Yes Bank remains the top Nifty loser owing to a string of negative news flow. The bank will now raise close to 10,000 crore rupees through various other methods. Good afternoon, Neeraj. It's a strong start to the week, and I guess for majority of the session we've traded above the mark of 12,300, so good start.
Yeah, not a bad start at all. And banks, while they are not participating with equal gusto, you have to say that Infosys is doing its bit, and that should be helping the sentiment as well. 12,317 in large portion due to the big boy in the IT space. As I said, banks aren't quite doing the best in the session today. They've come off and are trading very, very flat, but they can take a bit of a pause in the session today, and nothing to untoward about that. Get the heat map up on the screen and show you what's moving and what's not. There is some strength in Infosys, as I said, up about 5% in trade, really strong move there. There is strength in some of the metal names or the companies in the metal index. So Coal India, Tata Steel, both the companies in the BSE Metal Index are doing well in the session. Wipro, in addition to Infosys and Tech Mahindra too, have done okay. HCL Tech too marginally in the green. So Nifty IT is not done too badly. What is not doing well is Yes Bank. Frankly, the one stock that needs to be mentioned, which is Yes Bank. So that is one. You got to monitor this. 5.5% down. TCS, a bit of a pullback. I think this is a bit of a switchover happening. The discount narrowing, and therefore pair trades or otherwise just a move away from the big boy, which has rallied quite a bit, that is TCS versus Infosys. Last but not the least, Eicher Motors is down about 1%. So after 8 straight days of a fall, a bit of a recovery, and in today's session again, the stock giving up some of the gains, down about 1%. Devina, broader markets, how are they done today?
Well, good compared to the large cap space. So they're in tandem with what the benchmark index has been doing. Nifty Midcap 100 is actually doing much better than the index itself. So it's up about 0.8% right now. And the small cap index too, with individual movers, is doing its bit. So let's talk about result reactions that have come about in Avenue Supermarts. Not a very big reaction, but nonetheless, the bottom line was aided by tax savings. So the stock is up 1.8%. Tata Elixir reported numbers. A 51% increment in the bottom line with a 9.7% increment in revenues. EBITDA margin improvement was significant as well, and the stock's up 5.5%. The stocks in focus, Edelweiss, some clarifications coming in from Rashesh Shah regarding the news break on Friday that was done by one of the other media houses regarding a particular forex scam. That stock's up 4.5%. ICICI Pru, HDFC Life, SBI Life, all of these looking at the December APE numbers and the growth that has come about from there. Stocks on the move, Chennai Petro, Friday session was locked up on upper circuit. Today too is up 8.5%, so there's some activity there. Tata Coffee is trading higher as well, and Max India at 79.5 now. You've got volumes increased highly from the last 20 days average. Fine Organics, 107 times the last 20 days average. Sarda Crop Chem trades 22 times the last 20 days average, is up 13.5%. And PTC India, 176 times. That's the volume picture that you've got. Near its 52-week high, DLF has made a new 52-week high today. It's up about 2.93%. Relaxo, 642 is its 52-week high. I think it scaled it. It's 643 right now. And then Tata Global Beverages too at 351, which is its 52-week high. Let's also take a look at what's been happening in the futures and options space. The derivatives market, Navneet is going to highlight that for us. Navneet.
Hi, Devina. Thanks for that. With the live highs that we've seen today, the fresh live highs, I think the base for the market is only moving higher ahead of the budget as well. Remember, just 2 weeks to go, and markets are at 12,300, which for the longest time, at least for last 1 month, was a very big resistance for Nifty. We've crossed that mark. Traded, by the way, for majority of the session above that level is pretty much a positive sign, though no major build-up has come in terms of futures. Pull up the Nifty Bank futures, which witnessed short covering in Friday's trade. trade, and today you're seeing underperformance from Nifty Bank as the index is just about trading in the positive territory. Open interest is up about nearly 8%. And remember, we were up on Friday, we are up today, but India VIX has also been trending higher, and technical and analysts have been highlighting even the historical data suggests that ahead of a crucial event like budget, you see VIX only moving higher despite of markets also scaling higher. In terms of options data, now the derivative analyst and even the technical analyst have been, looking at the range of about 11,200 to 500 on the upside. At least that's what the monthly data has been suggesting. So for this week expiry, 12,300 put has added nearly 16 lakh shares. Writers are betting that the expiry, at least on this Thursday, will happen above that mark. And you're seeing some addition actually coming in for 12,300 call as well. So nearly 6 lakh shares have been traded. Let's see if today's closing comes about 12,300, because this will be the first time if that happens we will close above that mark. And even the 12,350 call has seen just minor writing in trade. Very quickly, 3 stock futures I want to highlight. One of them is your heavyweight on the index with nearly 5% weightage, Infosys, which has gained a good amount of volumes on the cash side, so that's a positive takeaway. 40% of the quantity so far traded has been marked for delivery, another positive point. And even if you look at the options data, the range has moved higher. Remember, until last week we were looking for 750 call, which was sitting with maximum open interest, but today there is a lot of writing which has come in at the 800 call, so that's added 15 lakh shares, while on the put side writing has come in at 750 and 760 strikes. So we're looking at a range of 750 to 800 on Infosys. DLF is the other one. The stock's up for the 5th straight session today, and it has registered fresh 52-week high. Remember, this is one of the outperformers among the Nifty Realty constituents. On the future side, there are signs of long positions as the open interest has surged about 10%, underlying up 3%. And not a very liquid stock, but still Colgate has been performing really well. I was looking at the cash volumes where the stock has gone up on good amount of volume. Look at that white line suggesting today's volume vis-a-vis the average volume of last 20 session. And even on the future side, you are seeing open interest building up, suggesting there are some long position as well as cash-based buying which is coming in Colgate-Palmolive, and also the stock price technically is moving very closer to its 50-day moving average, and the stock currently trades at levels of 1473.
All right, let's welcome a global voice then. Rainer Michael Preiss of Taurus Wealth Advisors. He's joining us right now on the show. A quick shift towards what the global markets are doing as well. Remember, Friday's session ended lower for most of the US equities on the back of weaker jobs data that came out. Rainer, just weigh in on this. We've been looking at the economic data points coming across the globe, and this time's jobs number that came in was much weaker than what the street had pegged in. Do you feel that much more focus now is starting to get laid on the kind of macroeconomic data points that have been coming out there, which have started to look slightly weak?
Yeah, look, I mean, this really is really the important and the big question. If you think about it, a lot of the equity market gains in the United States and as an extension of that globally last year were on the back of multiple expansions. So again, the underlying economy has been weakening. A lot of economic data has been sort of disappointing and weakening, and hence the real question is how expensive can equities become? In the US, the equity market is currently around 18 times PE. 19 times seems to be sort of fundamental resistance in US equities. And again, fundamental resistance from which perspective? If you think about it, the US stock market capitalization to GDP is now at 150%, so it's the highest in history. How high can equities go? Who knows? But again, this is the level where actually we're getting at a level where at 150% of US GDP, the stock market increasingly is at level where it's at least as expensive. But again, what is expensive can become more expensive. So I think this is why the consensus view still tries to sort of think we could have 6 to 8% upside in US equities. But again, this is at risk of short-term to medium-term pullbacks because short-term the market looks potentially overbought.
Okay. This week is also important, Rainer, from the trade deal standpoint. The signing of the first agreement on the trade truce. What's your take on how big this could be?
Yeah, look, I mean, in markets you often have this old proverb or adage. I mean, buy the rumor, sell the news. And if you remember, a lot of Bloomberg comment was always markets are rising on hopes for US-China trade deal agreement. Right now we seem to have something in writing, looks like it this week. Potentially could see sort of a sell the rumor, buy the rumor, sell the news environment where we can actually see a pullback on the back of this. Because again, even though there's an agreement, does it fundamentally change that, what do you call it? What's the right word here? that struggle between the United States and China? Most probably not, especially since, in my view, the Taiwan election is now further complicating the US-China relationship, because like Hong Kong, Taiwan potentially could upset some people in Beijing.
The other point also to keep an eye on is the fact that you'll be getting US inflation numbers, retail sales numbers from the holiday season. Now that we've already got a look into the jobs data, that's also going to be an important monitorable. Map that in terms of the kind of equity mood that you see coming out from the kind of numbers that they post.
Correct, and this is what we and a lot of investors are looking at, is exactly that question with regards to equities in the US. Will it continue to be driven by growth equities, growth stocks, or will potentially we see a shift into value stocks, right? And again, value stocks might actually benefit from the Fed agreeing, and Fed publicly said that they're willing to allow inflation expectations to rise, whether inflation expectations or inflation would rise to a level where it would potentially benefit value stocks. And this is also what the consensus view for many banks increasingly is, that the US might this year actually underperform Europe and other markets that are considered to be more value markets, like Europe, for instance, where European financials, European banks have very much underperformed, but European banks as a sector has a very attractive dividend yield in the global context. So the real question, I think we are seeing this, value could potentially outperform growth in 2020.
Hi, Reena. Good afternoon to you from India. The rally that we've seen for equities globally has been liquidity driven. You said valuations for US markets are also at the tipping point. 18 times is a resistance that we've seen in the past. And if I were to map that with Indian equities, we are at life highs, and our valuations are also around the level where we've seen resistance coming in the past. Any thoughts, any views in Indian markets? Do you see the rally that we've seen, for the polarized rally that we've seen in the last 1 year, will that continue, or money could shift to the other emerging markets, maybe China?
Yeah, look, I mean, China increasingly looks to be a little bit more constructive, and also technically China looks more interesting. But I think with India as an emerging market, I think many global investors like the domestic consumption story. On the other hand, like Yes Bank and today, some of these challenges with regards to individual sectors and bank stocks is still a concern. But I think more importantly, if you look at the global stock markets this year, what has done well year to date are mostly the oil-driven markets. So Nigeria is the best performing market in the world according to Bloomberg data. Russia is doing well. So all these that are somehow benefiting from higher oil prices. India historically has sort of had headwinds if oil would go higher. So India is one country that is a big oil importer, so higher crude prices is not necessarily constructive for Indian equities or Indian economy. So that, I think, is still continues to be a headwind, whereby foreign investors in emerging markets might actually see that the high oil prices, because of the Iran tensions and so forth, are headwinds for India. So I expect this to continue for the foreseeable future until we have some more clarity with regards to the US-Iran issue.
Point well taken. Definitely higher crude prices do not augur for Indian markets. We import nearly 80% of our crude requirement. Having said that, the crude prices have cooled off. But last year was a rare year where we saw, equities performing well. Even gold was up about 18 to 19%. Do you see that happening this year in terms of asset allocation, since there are some geopolitical tremors that we've just felt in the last 7 to 10 days, that money could continue moving towards yellow metal as well?
Yeah, look, increasingly I think the consensus is, as I said, the Federal Reserve Bank system, rather, in the US is increasingly willing to hopefully tolerate higher inflation. And that, I think, is the driver. The Fed potentially could lower rates again 2 times this year. That's increasing the consensus. So another 50 basis points reduction in US base rates. That is all very positive for the price of gold. And more importantly, in Europe as well, there's now increasingly political will to have fiscal stimulus. And that, again, Europe already at negative rates, potentially going even more negative. This is all very positive for gold. And don't forget, gold is the only major asset that is still actually on 7, 8 year, 9 year lows, because almost everything in the world has gone up, right? I mean, some people call it the everything bubble, and gold has actually been lagging in this everything bubble. But gold is also the systemic hedge against any of these bubbles actually turning into a potential bear market. So I think gold is, in my view, the highest conviction call for this year, gold and gold mining stocks. And they also, if you look at the industry ownership, they actually technically still under-own. Many investors have still a very small allocation to gold and gold mining shares. The focus is still on technology and so forth.
Rainer, just one quick question, although you in part answered it. If indeed we see a comprehensive tariff deal and not a trade deal, do you believe the markets have room to move higher from where they are right now?
Yeah, it looks like it. I mean, the momentum is don't fight the Fed, don't fight the momentum. And the momentum for US equities is up. But I think at one point we have to have a reality check. And I think the reality check is coming in the next few weeks. And that's the US earnings season. I think we would seriously need to have earnings growth, not just multiple expansion. So that's why, again, at these levels, can you buy US equities? They can go higher, yes. But I think the risk level associated with buying at today's level, in my view, are rather elevated.
Okay, Rainer, we leave it at that. Thanks much for taking the time out and being with us, and let's hope we get a good deal come January 15th. That's from Taurus Wealth Advisors. On to some corporate conversations as the Nifty Bank slips marginally into the red and the equity markets too come off a little bit from the highs of the day. Ahluwalia Contracts held an analyst meet recently. It guided for a 15% top-line growth in FY21. Also expects order inflows ranging between 2,000 to 3,000 crore rupees amongst other plans. Let's discuss all of this with Bikramjit Ahluwalia, the CMD of the company. Mr. Ahluwalia, good having you. Thanks for joining in. Where does this optimism stem from? Is it some resolutions which of sectors which will help those sectors do well, or you will get this order inflow irrespective of any other uncertainty?
You'll have to repose the question. I could not actually hear you properly.
Okay, can you hear me now, Mr. Ahluwalia?
Yeah, this is Vikas here.
Great. Good afternoon. I was asking, where does this optimism around this order inflow and the growth come from?
Actually, I'll just confirm. My name is Vikas Ahluwalia. I am also the MD here.
Okay.
And Mr. Bikramjit Ahluwalia is my father. He's so I'm taking this call. Yeah,
fair call, Vikas. No problem. We had the information that it is going to be Mr. Bikramjit Ahluwalia, but nevertheless. So Vikas, tell us, you've in the analyst meet held recently, you've mentioned that the order inflow is looking optimistic. You would have growth of about 10 to 15%, if I'm not wrong, in FY21. Where does this optimism come from? What is changing on the ground, if anything?
As such, you see, there is no change on ground in terms of the government policies or things like that. At least that's not what we are aware of or I'm aware of. But the optimism is from the fact that, which I also told in the meet with the analyst also. I was the one who met with the analyst myself. So it's basically, you see, the momentum that already has been set by the government at state or center. Maybe, for example, there is a focus on healthcare. So that now even the government cannot stop because those projects are now going. Or, there is a certain push in certain other sectors. So that will, because that is something which even they will take at least a year because they have their own momentum now. So that is where we are coming from, that yes, there is going to be some work which is coming, and we are also participating in some good projects.
Is there upside potential to these targets? I'm subject to certain other projects / contracts getting clued in? Or so the question that I'm going to get is this an optimistic scenario, or is this the base case scenario which you've given out?
This is a base case.
Okay.
So what would the optimistic scenario be? This is realistic according to you, right? I mean, everything is put in place. This is
achievable. This is achievable.
Okay.
I don't want to say optimistic, or I mean, this is achievable. This is something which.
All right. So because hospitals still form a bulk of your order book, will they continue to do so even in the upcoming quarters? I mean, Q2, I believe it was about 39% of the total order book. Is that where you're focusing on more as well as you move along?
You see, the word me focusing is actually very, it's a very, topic, subject which is, relative, because my focus is where the projects are coming. So yes, there are projects coming in the healthcare space. We are participating. If there are other spaces also which come, I can't say that I can't say I will not focus on institutional projects, because if there are going to be some good institutional projects, yes, we are there, and we would be examining the opportunities that come by.
Okay, no, for sure. But just the fact that it is a bulk of your order book, that's why the probe. The other point being is smart city space. Is that also a space where you're seeing activity building up and orders are likely to come in from there?
Yes, so smart city is something which, is something that, yes, we are looking at the space. And although we've made a little start in smart city, we are doing some CCTV project in Delhi for about 85,000 CCTVs. So we are going to carry this forward. We are getting some queries from other cities also and some other departments also within the cities where, they want to go in for digitalization. So we are also planning to set up a special digital transformation team within the organization to look at this sector more better. Although the smart cities song has been being sung for the past few years now, but actually now something is happening.
Okay. What about, the end of this year then? I mean, for the first 9 months, you've done well. You've got, I think, about 2,000 odd crores in terms of your order book. Your L1 in about 1,200 crores worth of orders. How much do you expect to clock in from that?
We are expecting another 500, 700 crores, but I can't say much because they are still the bids under preparation and, it's
for FY. Okay, got it. So for
too premature to comment on that.
So you're saying probably by the end of the year, that's with 1 quarter left now, we're at the end of quarter 3. You're saying you'll still be around 2,600 crores?
We should be, yeah. You see what is happening now. One, the year is coming to a close, and 2, the elections are being announced. So a lot of these projects might, which are on the drawing board, may not happen.
Okay, and what about the AIIMS Jammu project and the bids there?
So yes, we are L1, and we are in conversation with the department.
That itself is a big order, right?
Yeah, that is where we've crossed our previous threshold of 500, 700 crores. So we've trying to move on to the next level.
Just one clarification. So this 500 to 600 crores of order book that you're talking about is excluding the Jammu order, right? That is a separate order. So if that comes about, then it will be an addition of 1,200 odd crores worth of orders that you're L1 in.
Right.
Okay.
Because one key concern, I guess, which the analyst community has had on the execution part, and also there was a 40-day construction ban in the NCR region. Can you give us a sense on ground now? Has the activity picked up in terms of execution of projects?
In NCR, yes, although the ban is quote-unquote partial because we are only allowed to work from 6 a.m. to 6 p.m. But yes, the work is started. At ground, things have picked up now. It takes a while to get the momentum back, but we are on it.
I'm just reading this from a brokerage note, which says that so far the company is given precedence to cash flows over revenue growth. So is that something you would follow even in the coming years? You would not lever your balance sheet, which is in good condition?
Yes, our current state of mind is that we prefer to have a healthy bottom line rather than just stacking up orders. And our current mindset is also, the current mind frame is also based that we are not looking at debt.
Fair enough. All right. Vikas, we leave it on that note. Appreciate you joining us and all the best to you for the coming quarters. Yeah. Okay, that's the management of Ahluwalia contract giving us how the future course of action can be for the company. Just pull up the last 1 year performance. Remember, as we were just talking to the management, execution has been one key concern. Of course, they met with the analyst community stating that they do expect 15% revenue growth to come in the next financial year. Remember, so far this year it's been flattish, and the stock price also in the last 12 months has given you negative returns of about 8%. But moving away from that and staying with the broader markets, multiple factors are now falling into place for mid-cap industries in the new year. That's according to a note coming in from Jefferies. They've highlighted tiles, electricals and plastic pipes as the key beneficiaries of government reforms. Shefali Malik is here with what more does the note entail. Shefali, over to you.
Well, a couple of factors are working for the mid-cap industrials according to Jefferies. So starting with multiple government initiatives which are likely to boost demand for a couple of the segments highlighted in the note, and the shift towards organized segment is also going to bode well for the industry players. Launch of premium products and balance sheet strength are other factors which are going to work well for some of the companies highlighted in the note. So these government measures which have been undertaken in last couple of months are likely to benefit tiles, sanitary ware, electricals, plastic pipes, and Jefferies' top picks from the sector are Supreme Industries, Kapadia Ceramics, and V-Guard. So starting with the electricals, so some of the key concerns are subdued demand and tight liquidity conditions, and from the space their top picks are V-Guard and Havells, which will be able to tide this particular slowdown according to the brokerage house. So they have a target of 295 on V-Guard, and on Havells a target price of 880 rupees a piece. On Finolex cables, however, they have a hold rating due to multiple concerns, and a target price of 425 rupees per share. When it comes to Whirlpool, they have a hold rating on the counter with a target price of 2240, and some of the factors which are not in the favor of the company right now are increasing competition, new entrants, and the valuations which look a bit stretched at this point in time. Now coming to plastic pipes from the space, Supreme Industries is one of their top picks from the sector, and they have a buy rating with a target price of 1520. Finolex Industries as well is a key favorite with a buy rating and a target of 765. Astral Poly, however, looks okay or neutral at this point in time, so they have a hold rating with a target of 1215. Coming to the tiles space, on Kapadia Ceramics, they are saying that even though there are near-term concerns, but medium-term triggers remain robust, and they have a target price of 795 with a buy rating on the counter. On UPL, they are saying that they are bullish given the scale and the benefits of Arista acquisition, so their target price is 795 on this particular counter. On graphite electrodes, so they are saying that industry is facing multiple challenges, but given the fact that the valuations are reasonable at this point in time, so they have they are retaining the buy call on HEG and Graphite India on inexpensive valuations and strong balance sheet as well. So on HEG, they have a buy rating target 1630, and on Graphite, buy rating again, target price 375 rupees a piece.
Right, Shefali, thanks very much for that. So keep an eye out on all of those names. Another name that you need to keep an eye on is All Cargo Logistics. It jumped as much as 5% after Bloomberg reported that Blackstone is nearing a deal to buy a stake in the warehousing unit of the company. PR Sanjay, who's been following up on the story, joins us for more. So what are the latest details that you're gathering, Sanjay?
So we understand that the deal is now getting closer, very close. It could be announced anytime this week, maybe today also. So Blackstone is picking up stake in the warehousing business of All Cargo, which later this is coming in based on various conditions. So various milestone. If you can recall, in the past also, Blackstone's investment in All Cargo came with some certain kind of milestones. So we also understand this deal will also be similar to that, where Blackstone will infuse further equity based on certain milestones achieved by All Cargo, and at the end, All Cargo will be a minority shareholder, and Blackstone will be the leading shareholder in the warehousing business, and they would be building industrial parks, logistics parks, warehousings, etc. This is most opportune time because it is coming post GST, and the logistic landscape is well aligned towards GST. So warehousing and storage supply chain makes more sense for them.
But we don't have an idea as to the timeline over which they want to finally get to being a majority stakeholder in All Cargo.
So what we understand is we spoke to our sources, what they're saying that this will be over in a year. So they will be making initial investment, anytime from now, and then the milestones will follow over the years. And All Cargo, like in past, they've jumped into this 3PL space around 5 years ago. So it will also take some time. But now this port-based logistics operator knows very well where to build a CFS, where to build an ICD, and where to build a logistics park. So this will be coming over the years because it's a long-term play for All Cargo.
All right, Sanjay, thanks very much
Thank you.
for that. Moving on, Indian broadcasters have moved the Bombay High Court challenging the TRAI's new order on pricing. The regulator has capped the price charges by the broadcasters for individual channels, and the new norms are scheduled to come into effect from January 15th. The TRAI, on its part, says it's trying to address any aberrations in the law. Nishant Sharma, who attended the TRAI briefing, joins us now with more details. Nishant, over to you.
Well, right, TRA today clearly stated that the revision of the pricing that they have done does not curb the freedom of any of the broadcasters pricing. It only, the framework was revised just where to make consumers have a transparency when it comes to choosing the price. And the revision, the first framework which came in 2018, the revision was done because the TRAI, the regulator, realized that the intended benefits for the customers to enable the freedom of choice when it comes to choosing their channels and paying could not be achieved because there was misuse in terms of flexibility by a group of service providers. Now, in stating why it wasn't, doesn't curb broadcasters to change the pricing, it was decided because they're saying that broadcasters today still have a full flexibility to price their channel as maximum price retail of any channels remains in forbearance. And also when it comes to a la carte as well, the broadcasters, the regulator states today that they beyond the capping, if the price of a single channel is not 3 times the price of a single channel in a bouquet, it's fine. So the regulator clearly says that whatever decisions they are taken are in favor of consumers. It makes the pricing more transparent, more easier, and does not, makes them feel more competitive. Now the regulator is going to meet all the broadcasters tomorrow, as one of the officials told us today.
Okay, Nishant, we leave it on that note. Appreciate you joining us and taking us through that update. And remember, these broadcasters have seen some bit of price correction. Be it Z. Today, of course, there is some bit of bounce back that you can see on the stock price. But Sun TV, surprisingly, was up 7% on Friday. After a while, remember, this has been a laggard in the last 1 year. No return seen here. The stock's been down about 30 to 35%. Today, after surging 7% on Friday, it is seeing some bit of cool off, though it's off the day's low. Sun TV right now sitting with cuts of about 1.5%. And talking about the markets, so remember, we slipped into the red for Nifty Bank, and for a very brief period, Nifty also slipped below the mark of 12,300. But around those levels, you are seeing some recovery coming by. So right now, Nifty at 12,320 and Nifty Bank trading at levels of about 32,200 thereabouts. All right, let's get you some technical check then. Ajit Mishra of Religare Broking joins us on the show now. Hi Ajit, good afternoon. What do you do at these live high levels? Is the risk reward favorable if somebody wants to take a long position now?
Yeah, good afternoon, Navneet. And obviously, you're bang on the first question itself, that whether the risk reward is favorable or not. So, Navneet, last time also we had a discussion regarding the same, that 12,300 to 400 zone is an area where Nifty has multiple hurdles, and we have seen, in last 1.5 years, it made multiple attempts but failed to uphold the same. This time it has crossed 12,300 mark, but I doubt, considering the strong resistance at 12,400, we're going to see any decisive up move, prior to any further consolidation. So since the bias is positive, obviously it's a buy and dip market, but the risk reward not favorable at the current levels. In fact, one should wait for a dip closer to around, let's say, 12,280. And then you can consider, initiating fresh longs with 12,200 stop loss and 400, 450 as a target.
Okay, so those are some levels to monitor on Nifty according to Ajit. And before I take his picks, I just want to highlight 2 stocks which have just gone up. One of them is the New India Assurance Company. There's been some sudden spurt which has come in the last few minutes of trade. There you go. It's cooled off from those higher levels, but still sitting with gains of 4%. And the other one is GIC, that's General Insurance Corporation of India. That too has gone up in line with New India Assurance gains that we just saw in the last few minutes. GIC RE at day's high, sitting with gains of about 5 to 5.5%. Ajit, okay, do you have a call on Nifty Bank for the day? And also take us through your individual stock ideas then for this afternoon.
So, Navneet, why we are not taking a short position in the index? Because we are seeing that Bank Nifty still has room on the higher side. So, 32,000 is the area where we feel Bank Nifty is having a very intermediate spot, and that's the area where one can initiate fresh longs. 31,650, which was earlier the resistance, should now act as a support, and that should be a stop loss as well. Upside 32,400, 500 is an immediate resistance, but we feel, considering the kind of momentum that we have in the private banking space, it can test to 32,650 levels also. Among the individual ideas, we are opting for the counters which have seen retracement from the record highs and now hovering in a range, so offering fresh buying opportunity. The first name is Colgate-Palmolive. After retesting the highs closer to around 1640, the stock has retraced of late, and after consolidating in a range for almost a week or two, it's all set for a rebound. In fact, it is up today, and which has resulted in formation of the fresh buying pivot. So one can initiate fresh long at the current levels with 1450 as a stop loss, and upside potential is closer to around, let's say, 1550 to 1580. And similarly, Petronet is the other bet. This stock has also witnessed the marginal profit taking of late and looks very strong on chart. In fact, in today's trade, we have seen a fresh breakout after consolidating for almost a month. So 270 should be a stop loss, and closer to around 285 is a target in Petronet.
All right. Hemen Kapadia of Choksey is also joining us on the show. Along with him on the fundamental side, we have Kalra. The other one that's doing fairly okay actually is KPIT Tech, and that stock's up about 5.5% today at 92. Remember, a few months ago traded at levels of 100, went down to levels of 85, and then from there now it's come back up. It's the highest point of the day. As the last 3 months, it's still negative. But the fact that it has moved up from those levels of 85 may talk of some strength that's coming back in. But Hemen, let's talk about your view on the index. 12th new record highs today. When we last spoke, I think it was last week when we did see those extremely volatile swings on the back of daily news flow. But the advice then was to go short on the rally, go short on the move on the upside. But is this sustainable? Is this here to stay, this move?
Well, it looks like. I mean, normally when you have some of the daily mechanical indicators, they've been giving you a sell after negative divergence. It means for the next few weeks, the market is supposed to either remain range bound or corrective. And yeah, it did go down, but everything happened super fast. We went to 11,950 and we reversed as if nothing has happened. So one, it doesn't make too much of sense, but yes, I think I would sell the 11,900 put. There's no other way I would like to trade the market, because if in such a precarious short-term technical situation, if it bounces back and makes a new high, it's obvious something else is happening which we are not aware of. So I guess pre-budget rally or what, we look set for a further upside barring a few hiccups. So I'd sell the 11.9 put and nothing else, because even now the hourly indicators are in sell mode and the Nifty's gone up. The VIX went up, came down, is at 14. But yes, I guess looking at individual stocks, mid-cap, small caps, FMCG sector, pharma, I mean, it's been across the board. So everything looks slightly overbought, but still fine. So I'd go with that.
Okay. And stocks?
Stocks, I like Pro ICICI. We're looking for a corrective bounce. Buy at 495, stop loss 488, target 509. We've overcome the 55-day moving average. Mechanical indicators have signaled a buy. It's given a mini breakout. Second one is a buy on Shriram Transport Finance Corporation. We've been range bound for ages, so to speak now. In fact, probably one whole year, if not more. Short-term bias has turned positive. So buy, I would, it's already moved up a bit, but I'll have to give it a conditional buy on declines. Buy at 1153, stop loss 1145, target 1169. It's a modest target. A close above 1180, 1190 should give you 1300. So looks very promising, but I have a slightly modest call for a bounce.
Okay. Samir, we have seen the index making a record high, but what's your gauge on how much of this move, has been beneficial for the retail participant? And do you feel that post the budget is the time that the retail participant will really come back?
So I think that day also, when US-Iran, all these tensions were going ahead, we were still that, you should start your SIP in mid-caps. Now there are two fortes over there that if you see the Nifty index, it's always touching a new high in, let's say, every 10 days gap.
Yeah, will not work.
Yeah.
Actually.
So and really right now, what I feel that you cannot catch what stock will lead the index from here on. It becomes very difficult because majority of the stocks which led it in last 12 months are already 30 to 40% premium on their 5-year average P. So it becomes very difficult for an investment value to be found in them. So it's always better for, I think, for retail investors now to shift a bit of money into the mid caps. And the value was already low over there. They were already running like a 40 to 50% kind of a discount to their 5-year average. And fundamentals did deteriorate in 4 to 6 quarters, but now I think it might just come on a base effect, and there are certain companies which still are, debt free on their balance sheet, which becomes the most top priority for at least for an investment thesis to work, because it will not be a smooth right up. So it's better to keep a mid cap SIP over there.
Okay, I just want to pull up IndusInd Bank, and this one comes out with the numbers tomorrow. Pull up the intraday chart of IndusInd Bank. There you go. It's sitting at days high, 2 to 2.5% gains coming by. Remember, the concern for this one have been lower PCR, that's the provision coverage ratio, which the management post Q2 said they plan to scale it up to levels of 60%. And the second, the other overhang has been exposure to telecom companies. So first, let me just take a technical check with the move, whether one can take a trade for tomorrow or not. Hemen, 1524, what do you do here?
1529 is the level I would look at. We haven't closed above this level in the last 2 months, 1.5 months, despite intraday highs, or maybe just one day. So it's a buy, but if it's a result, it's a qualified buy. So I'd rather buy a call instead of going long in futures, because whatever the results, it tends to misbehave. But going pure by only by technicals and not bothering about the results, it looks good. There's a clear upward bias. Indicators are turning positive. There's been volumes at lower levels. I feel we are setting the stage for a move on the upside. So looks quite promising. But since the results, I'd go long in buying. We are at 1524. I don't know which series, but maybe the 1530 or even the 1550 call seems good enough, because 1550 can be a cinch above 1529.
Samir, BofA recently, increased the target to 2,000. This has been an underperformer if I compare it to the other private banks last year. The last quarter commentary was they will use the tax savings to increase the PCR. But overall, do you think now is the time for someone to enter into it only on basis of valuation and the underperformance vis-a-vis the other private banks?
So I think that's not the case over here. Let's take why the valuation was still lower and underperformance was there. The CV cycle still dominates at least the retail end and the let's say small ticket size over there. So that is not seeing any kind of relief from the delinquencies, I think. So that is one thing which I'll track on. Secondly, Bharat Financial is the integration part. What kind of asset quality pressures on quarter basis are you facing over there? That becomes very important. So, and plus the management change will kick in. So I think these
they
three...
still have a few more stressed accounts which they've not classified.
Yeah, so I think the stress accounts for me, I think it becomes very difficult to justify why haven't they taken the hit on it. But even if I remove the large ones, I think the SME and the Bharat Financial delinquencies might be a bit higher in quarter terms. So it's at a very neutral zone for me right now. It doesn't become a buy because of the undervalue. If these reasons try to reverse in quarterly numbers or even on a quarter, I think I'll be better off going in late rather than preempting it and entering it up.
Okay, let me close the loop since Bandhan also comes out with numbers. That too is trading with some bit of gains. Any expectations here?
So Bandhan, I think only the delinquencies will be the most worst thing and the collections. Because they had faced a lot of protests during the quarter and there were a lot of issues. So I think over there the collection rate will be important, and the delinquencies, what kind of a recognition or provision they do for that. Whether it's front loaded or they are still conservative and keep it on the side and disclose it separately rather than providing it for. So I think these two factors are important over there, but I will still stay a bit far from it because of the Groove Finance integration, which will happen later on.
Ajit, let's talk a little bit more about one pocket that has been active, possibility of price increases coming about, which is aiding some of these players. We've seen Shree Cement doing what it did over the last few days and going from strength to strength. Do you feel there's a trade open within the cement pocket, even the larger names or the smaller names, anything that you feel?
So, Devina, yes, I feel that UltraTech Cement still we have room on the higher side, considering the kind of consolidation the stock had witnessed in the last 5-6 months, and the risk to reward is still favorable. But in case for the fresh buying, I would still feel that in case if it witnesses any dip closer to around 4,400 levels, that's going to be the best area, considering that the upside is capped closer to around 4,800 mark. So the stop loss is at 42 and buy trade is closer to around 44 with 4,800 as target.
Okay, since we are on the topic of cement, I just want to highlight two other companies which have been trading below their historical averages, and these are the companies which have good brand recall as well. And I'm talking about both ACC, Ambuja. Remember, Ambuja is a parent here with nearly 50% stake in ACC, and there you go. This is the price to earnings trend for ACC. We've taken it from 2015 to current. Here's a peak in 2017 when the stock used to trade with PE multiples of northwards of 35 times, and 5-year average, if you were to take, it is nearly 25 times, and 1 year forward now for ACC, it trades at nearly 18 to 18.5 times, telling you some underperformance and also the valuations coming off. I will come to the reasons later, but I also want to pull up this chart for Ambuja as well and show you how the PE multiples for this one have stacked up right from 2015 to now 1 year forward. So here as well, the peak was seen in 2017, once again northwards of 30 times. 5-year average for Ambuja's PE is about 23 to 24 times, and currently 1 year forward for Ambuja is at about 19 to 19.5 times. Let me state the reason for underperformance now. What can be the potential reason? So I just came up with a couple of factors here. Both the companies have not done any expansion plans, at least in the last 5 to 6 years. They've not set up any capacity. Of course, now they've planned and they've announced as well. You'll get Ambuja additional capacity coming on stream this year, while for ACC it will come in 2021 and 2022. So what happens when you don't take any expansion plans? You lose market share to other companies, and that's exactly what happened. If you look at the capacity for ACC Ambuja, it's somewhere about 30 to 33, and look at Shree Cement, they've already reached 40 million tons. So loss of market share has taken place, and there was a proposal for merger of both these companies, due to which the street and of course the companies also highlighted some synergy benefits to come about. So that fell through. No synergy benefits came. That could be another potential reason. Can this pose a case for re-rating then, considering they've underperformed? So it just came out with a couple of factors, as I already highlighted. They've been trading below their historical averages. Also for cement companies, you look at something like EV by EBITDA as well. So both these companies have been trading at 8 to 9 times vis-a-vis. If you look at UltraTech, that trades at 12 to 13 times. And this one's trading very close to the replacement cost. The replacement cost for a cement company is somewhere about $110 to $120 per ton, and that's where these companies have been trading. Of course, strong brand recall, and also the balance sheet is healthy. They don't have any debt, both these companies. So the stock prices have been inching higher because there's been news of price hike. ACC, of course, is a pan-India player, while Ambuja has major presence in the West region. But looking at the underperformance, can technically, first let me check with Ajit if the stock prices can go higher for these companies. Ajit, on the charts, there is some movement at least which has come by. Do you prefer ACC Ambuja on charts, or do you still feel companies like Ramco, Shree Cement, which are trading at their 52-week high, stands a better chance for further increase in stock price?
So, Navneet, since we are seeing both these counters underperforming, obviously the first preference is UltraTech, Shree Cement, Ramco. But yes, we are seeing traction coming in both these counters, and in fact, ACC has recently breached its resistance hurdle closer to around 200 EMA. So that becomes a candidate to keep on a watch at current levels. But yes, I doubt that this uptrend or this up move can extend further, considering multiple hurdles at higher levels. So in case of ACC, 1517 to 1580 is a very strong resistance area. And Ambuja is still struggling in comparison to ACC. It's still hovering below its long-term moving averages on the weekly charts. So 218, 220 is a very strong resistance area. So I doubt there'll be any, substantial uptick in the counters, at least in the days to come.
Samir, this argument about the companies at replacement cost and therefore do they get the valuation? Now clearly the P multiple demolition of sorts in both ACC and Ambuja show that the return ratios coming off would also play a part here. So my question therefore is that do these valuations make ACC Ambuja compelling, or would you, if you were to make a bet on cement, bet on the companies which have done well in the last 5 years, the likes of Shree, maybe even the Dalmia Bharat, or one of the southern names like Ramco, etc.
His favorite has been Shree for the longest time.
Everybody is right. I mean, just look at the market cap scale up that Shree is done.
See, what happens, the industry is very heavily capex driven. So if you don't do capex, you lose out on market share, like she explained also. And once you lose out the market share, gaining the market share is not that easy. It becomes out of sight, out of mind for a lot of distributors, especially because when Shree Cement expanded capacity, they made sure the distributions expanded at the same time. So ACC and Ambuja have a parental issue. Let me put it in that way. They don't have a balance sheet issue or a P&L issue or a capacity issue. They have a parental issue. If your parent is not interested in being aggressive when others are being, you'll always lose out, and that's why you see the discount. So yeah, there is a valuation, screaming out that you have a 20 to 30% kind of a move from here, because the average 5-year PE is around 24 and you're trading around 18. So that becomes the point. But if my parent is not interested in moving ahead and recognizing that we have lost it and now it's time for us to gain back, then again your capacity expansion will not play that much, because you're a B2B business, you're not a B2C business. Okay, real estate is not working out, it cannot be the reason for you not investing. So I rather be with a company who has a strong balance sheet and is constantly investing and still remaining, magically debt free. Let me put that way. If I have to take a bet, maybe a JK Lakshmi looks better off in compared to the space which is, and the valuation it is trading at, and the balance sheet they have. And even the promoters, I think promoters are more solid enough to handle these heavy capex industries. So I think it's better over there, but fundamentally I'll still be invested in Shree Cement rather than being anywhere else.
Okay. The other one obviously now is Tata Elixir. That's a stock in focus because it's come up with its result and a strong set of numbers at that. A 51% jump in its bottom line, 9.7% jump in revenues, and that's doing well for itself. At 890, that's a 5% jump on Tata Elixir. Volumes have also spiked up. A quick chart check on this one, Hemen. Would you take a trade on Tata Elixir?
On a small decline, 800 to 900, 810 to 900, we've been in this range for around 14 trading sessions. We're setting the stage for a breakout. Indicators are turning positive. Obviously, because of the results, volume has spiked up. Volume has spiked up significantly. This is gross, but we're at 35 lakhs, almost 36 lakhs volume, Devina, and this is the highest in the last 15 trading sessions. Looks great. It's just that we've come to the previous high at around 900. That's a swing high. That's why we've come off just a tad bit from its intraday high. But barring that, I think it looks good. So, yes, so we're at 892. Sub 880 would be a maybe decent risk-reward ratio for me to go long, Devina.
Okay. Samir, I'm not coming to you on Tata Elixir, but I want your opinion on Infosys and the numbers that they posted. Now, it looks like the BFSI segment is under stress. It's been, I think, the second or third quarter that this pressure has been seen. The top client and the contribution in terms of revenue from the top client has also not been up to mark. But leaving that aside, they are seeing deal wins. This negative overhang is out of the way with regards to the whistleblower complaint. And the steep discount between TCS and Infosys, I think it's a 28% discount that they're currently seeing in terms of valuations. Is that likely to shrink materially in favor of Infosys, considering TCS has already run up quite a lot? And then what do you think TCS could do this quarter?
So I think if you compare the two, cash flow generation is better at Infosys. So that gives a better chance for the valuations to catch up. They have been winning deals, and it's been translating into execution. BFSI, I don't think so for 12 months next 12 months will really work in favor of these companies, whether it's Infosys or TCS, because BFSI spend really gets on hold for the election year, and that's where these issues will come up constantly. If you see, the attrition for Infosys has really come off to 17.6. It was running at 19 and a half, 20. That was, I think, for me, the main concern over there. If this sticks around for another couple of quarters, then you will see that rally play out really well, and the valuation catch-up will happen. Constant currency growth, if you see quarter on quarter, was hardly 1%.
Yeah.
So over there, that becomes the second concern for me, because if again the BFSI sector will not revive in next couple of quarters or not show the higher execution, those deal wins really doesn't come out really in favor of Infosys, at least for now. So I think it's better to keep away from both these companies for this next 12 months. And I think it's better to find opportunities.
Miss out on an entire year of investing into IT?
Don't expect a capital appreciation from them this year. I feel it'll be a very minute as compared to what relatively others can perform. I'm not discounting. Maybe a HCL Tech will be a better play this year in terms of capital appreciation. I'm not discounting their cash backs to investors. They are much better than anyone on the street. But yeah, as a capital appreciation, I find it a little intimidating to be there in that right now, and more of a sleepless night over there.
Okay. Well, Samir, we'll leave it at that. Thanks much for taking the time out and viewing us today. I appreciate your time. By the way, just before we move on to the next piece, want to mark Bharti Airtel, and there's a sharp uptick that has happened there. As also, of course, IndusInd Bank has led down even further, but look at that, 3% higher for Airtel, a sharp uptick there. IndusInd Bank at about 15.30, also showing a further pullback after that thing. So Hemen's call of creating a long position, albeit on the call side, because he doesn't want to take a risk with the results, but it's paying off for now. Let's wait and watch. HUL, meanwhile, is also up 2% and gains just a little bit in the last few minutes. And the broader end of the spectrum too, we have a couple of names, the likes of Taj GVK, which has gained quite a bit. There is Universal Cable, which has gained quite significantly, so do watch out for that as well. L&T Finance Holdings has had some gains, so a clutch of these names seem to be doing very well for themselves. Well, speaking of companies like Tata Elixir and Infosys, all of which were to move out the results, and we spoke to Citi Research on the corporate earnings season, and they don't believe that it can grow beyond single digits in the third quarter. This is despite Infosys meeting street estimates and financials looking okay. Citi is factoring in an overall growth slowdown for being cautious on their outlook. Speaking to BloombergQuint, the team did highlight one or two pockets that could still justify such high valuations in a scenario like this. Listen in.
Let me start with Infosys and then go to your questions. I think in Infosys, if you see the numbers are not very different from what the street was expecting. I think one is the investigation outcome. That is clearly being taken positively, and I think we are at a point where even lack of negatives is a positive. Yeah. So that's where expectations are. So I think a combination of those two things and the fact that Infosys looks relatively better in the sector and market context, that is what is leading to this upside today, we believe. Now going on to the second part of your question, so purely from a quarter perspective, what we are seeing is that the benefit that or the good numbers that you see in financials and the benefit of the tax cuts, a lot of that is kind of being negated by the global sectors. Okay, so if you look at materials, particularly the metal side, you look at energy, the numbers are looking pretty weak. Okay. And they are kind of offsetting each other, and which is why you are ending up with a high single digit kind of a growth for the Nifty. Okay, so there are enough offsetting factors, and that is the reason why earnings is, the numbers are looking very similar to what they were last quarter. That's what our expectation is. So I think you spoke about the demand slowdown. Generally, things are looking a little slow. So at this point, the view still remains that from an earnings perspective, This year we should end up with a high single-digit kind of growth YOY. Next year, again, we'll really have to see. Our team bottom up is penciling in a number which is almost 25% YOY excluding one-offs. But then we have seen 8 straight years where we start with 20 plus and end up with a much lower number. So I think we'll have to wait and watch. Top down, our view is that the numbers will definitely be lower than what is being penciled in by our team as well as consensus.
What about L&T in particular? Because we've seen that the order inflow hasn't actually picked up in the third quarter. I think last year was an exception, but years before that, L&T always has a habit to cut order inflow guidance probably in the second or third quarter. You see this time around there could be a potential where they could actually trim down the order inflow guidance?
So first half, as I said, even in terms of order inflow, was quite strong. So their order inflows grew 14% year on year on a very large base, and even order book grew. And that is why after second quarter, the usual cut did not happen. Third quarter, we expect to be soft, and it remains to be seen as to how the rest of the financial year pans out to be. As we have highlighted in our note, there could be some risk to this year's order inflow growth number. So. That is something which we need to watch out for. But as far as the execution and the P&L parameters are concerned, it will be quite healthy in my view.
Okay, interesting. What about the other non-capital goods segments? And while there is a lot of talk about reform, a lot of reforms also, let me admit, have been done. None of them or most of them will not reflect in the quarterly numbers, right?
Yeah. So essentially, this quarter's numbers are kind of a reflection of what has been happening in the past. Okay, so obviously these reform measures, should impact the numbers going ahead. The biggest problem in the broader space has been lack of demand, which has led to a situation where capacity utilizations, have been 75% or even below that, and which has kind of kept on delaying, the hoped for capex recovery. To be very frank, till last year, say around September of 2018, we had started seeing some kind of growth in the capacity utilization numbers, and there was a hope that if that continued, the orders will start coming through. But because of what has happened with financial services space and the tight liquidity, that has been pushed out.
If you guys have either insurance or AMC companies within your coverage, what are your thoughts there? Can the quarterly performances help the stocks sustain the valuations? Do you have opinions on individual names within the insurance or the AMC space?
So I'll let Manish answer that question, but I'll just start by saying that from our perspective, there we do have sectors or stocks which look expensive as overweights in our model portfolio. But what we are looking at essentially is for stocks which are taking market share. So if there are stocks which are taking market share, for example, certain select private banks, or insurance anyway is a fast growing piece. It's a more a penetration thing than a market share thing. So we are looking for those kind of stories. And if you see our overweights, bulk of those overweights are essentially lying in those areas. And I'll let Manish answer that question.
Yeah, so we do cover life insurance and HDFC AMC, but if you were to generally talk about what is now called as the non-lending financial space, insurance, asset management and all, that space has really expanded over the last 12 to 18 months. I think there are two drivers for it. One, the standalone companies are delivering good performance. Look at life companies or HDFC AMC. And B, a large part of the financial services universe, which was the NBFCs, is no longer investable for many of these. So they were looking at alternatives. So once you bought those 3 or 4 large banks in a portfolio, where do you buy? So as long as life companies or AMCs or other companies, some of which we don't cover, they're delivering and the underlying business model is not broken in any sense, I think the premium valuations would sustain. How long it can continue, we can keep debating, but it's been going on for almost 18 months now from the time ILFS started, right? Coming specifically to life companies, all the 3 listed life players are delivering good growth numbers. The margin is steadily expanding, VNB margin. And VNB margin is a real key driver for life insurance company growth. So as long as business mix is shifting in favor of higher margin products, protection and non-par savings, even with a moderate premium growth, I think VNB growth will be good, which should support valuations.
All right, that's the team of Citi. highlighting what they expect from December quarter numbers and what they like at current levels. They've stated financial and healthcare sectors are something they're looking at current levels, and also they've said they've increased their overweight on steel companies in the last 1 month. All right, moving ahead and addressing the Fab 4 stocks of the day, let's go across to Sharad Dubey to find out what features in his list. Hi Sharad, good afternoon.
Good afternoon, Navneet. The first stock is Hindustan Aeronautics. The stock is up more than 8% today, seeing its biggest intraday gain in almost 11 months. So Business Standard reported that government plans to order almost 200 fighter jets for the company. So Defense Secretary said that the government is in the final stages of ordering almost 83 Tejas advanced aircraft jets, and also they have shown an expression of interest for 110 aircrafts. Up next is Balrampur Chini Mills, which is up almost 3.6%, as the company has commissioned 160 kiloliter per day capacity at its distillery unit at Guleria. So the total capacity increases to almost 520 kiloliters per day. And the next stock is L&T Finance Holdings. As Neeraj had pointed out earlier, it's almost up 3.8% today, after UBS had initiated a buy rating with a target price set at almost 165 rupees. So the brokerage has stated that risk of infra projects have actually have started coming off, and also lower competitive intensity will improve the chances of and will support the loan growth. And apart from this, also easing liquidity will reduce the cost of funds. And the last stock of the day is Tata Elixir, which is up almost 5% after it posted a strong Q3 results, and it had its biggest intraday gain in 6 months. Back to you.
Thanks a lot for highlighting those Fab 4 stocks of the day. And staying with Tata Elixir, Agam Vakil is here to take us through the fine print of the quarter gone by. Agam, what stood out? The stocks reacted quite positively.
Yes, Navneet, this was actually a reaction and a follow-up of what the management was suggesting. So while the first and the second quarters for Tata Elixir were quite weak, the management had maintained that eventually they are expecting an improvement in not only revenues but also operational profitability. And even though they do get a good, very large chunk of their revenues from Jaguar Land Rover, well, there are a lot of aspects which were working in their favor, which means that while the deals that they had signed, the execution was delayed. It's not like deals weren't happening. That is what the management was suggesting. Because of that, we're starting to see results now which are evident in the earnings. A 10% growth quarter on quarter for Tata Elixir, margins expanding to 22.2% against 18.2%. So that's considerable expansion in margins as well sequentially. And net profits rising by as much as 51%. We've seen a follow through of what the management was indicating in the previous couple of quarters. In the third quarter, there has been a pickup. Execution has begun on several of the projects which were signed but which had not yet begun. And of course, software development revenues, the company gets about good 90% of its revenues from. That's seen a growth of around 10%, and systems integration revenues have also risen 8%. So a lot of these factors coming into play, and that's why we are seeing such strength on a sequential basis for Tata Elixir.
Right, Agam, thanks very much for that. And on similar lines, a company that is solely dedicated to the auto space is KPIT Tech, which provides content and it creates the whole host of the array, the bouquet of products that, the software for the auto sector that it needs. That's where this company focuses on at this point, and it stocks up about 5.7%.
Well, as somebody who actually looks at all of these so closely, we've spoken about Infosys so much, but Dipan Mehta of Elixir Equities Johnson right now to speak about his thoughts on markets and lots more. Dipan, good afternoon. Thanks so much for joining in. Since you're on the topic of some of these mid-cap IT companies, can we start off with that conversation first and then move on to the other things? Did you have a chance to look at what Tata Elixir did in the quarter, and what do you make of their performance?
See, I think Agam summarized it quite well, and maybe he was there at the last con call, which is exactly what the management told us, and I was also present in that con call, that although Q2 was bad, they were expecting very good ramp up in Q3, and a lot of clients which they had cultivated over the previous few quarters were now going to follow through with higher billings, and also some of the issues with JLR were also gradually getting resolved. So I am not surprised by the numbers. I think they are better than what the street was expecting. but by and large maybe the street had not accounted for the fact that the management commentary the last quarter was exceptionally positive. And I think next 2-3 quarters also may turn out to be good for Tata Elixir. And valuations, I think, at the premium end, but considering the business model and the pedigree, I think they are well justified. So maybe this could be a good outperforming stock within the IT industry.
Okay. 888 now on Tata Elixir. Dipan, while the markets are trading at record highs, do you feel that some of these broking houses are likely to benefit further because of this interest that's there in the stock markets? I mean, look at Motilal Oswal from levels of about 670, 650. But that stock's in the last 2 months or so come to levels of where it's trading at, I think, 880. That's where it is at right now. So the interest is there. Do you feel that this is a place to be?
Absolutely, and one thing about Motilal Oswal is that they have a broking business, but the revenues and the growth is being driven by the asset management business. And we are all very much like the financialization of savings theme, which is broadly underway, because of which insurance companies, especially life insurance companies, have done well, asset management companies have done well. And now I think that is flowing through some of the other wealth management companies like, say, Motilal Oswal. Another name which comes to mind is IIFL Wealth Management also, which could turn out to be an outperformer over the next 2-3 years or so. So there is more and more money coming into mutual funds, into portfolio management, some of the other financial products, and some of these AMCs are also looking overseas to advise and raise funds. And I think all of that is going to eventually result in higher management fees. And these are all models which have very high operating leverage. So in good times like this, when they're able to raise more money from investors, a lot of those management fees will flow through to the bottom line as well. So very positive on that entire set of companies. Although on pure play brokerages, we'd like to be a bit cautious. So the likes of, say, IIFL Securities, that also has done well, but that's highly cyclical and a competitive industry per se. And it's not that basically trading volumes have moved up. In fact, trading volumes have been pretty flat to soft over the past several quarters or so. So while we are very positive on the asset management and the wealth management companies, our view on pure play stockbroking companies is not that optimistic.
So look at ICICI Securities also, and just in addition to that conversation, NSE's active clients have risen by 9.6 million in December 2019. That's a 7.2% growth on a year-on-year basis versus just a 4.9% increase from November 2019. So you are seeing that kind of interest that's coming back into opening new accounts as well in terms of trading as well. Much of that happening in the derivative space although. Dipan, other than that, the overall gauge of the market mood right now, I mean, we're talking about exuberance, but limited to a few stocks.
No, I think we are seeing a lot of liquidity coming into the stock markets, and that's because other asset classes are perhaps still underperforming, or maybe investors feel that there is better scope for net post-tax appreciation in stocks, which is why we are seeing this kind of inflow coming in. And everything has a cycle, so we've had a bad economic cycle last 6 to 8 quarters or so, and eventually that also will turn, maybe not this quarter, next quarter. I think at some point of time we will see a revival across the board, across several industries, economy as a whole. And a lot of the measures taken by the government and the RBI, I think they take a little bit of time to play out. But as and when they do that, I think you will see a broad base across all sectors recovery. And I think stock markets are trying to price that in. We are entering into a very heavy news season with a lot of earnings coming in, and then there's the budget as well. So investors don't want to be in cash at this point of time. And the general expectation is that we'll have more positive news flow than negative news flow over the next 1 month or so, which will be quite interesting because we'll have the earnings, as I said, and the budget as well. And more than the earnings, I think management commentary will be very important. And I think we began on a good note with Infosys and with Avenue Supermarket. These two companies have really beaten street expectations. And today we had Tata Elixir also, which has come out with a good set of numbers. So let's hope that this earnings season is kind of a breakout earnings season for corporate profits. and for the stock market.
Let's hope that, Dipan, there is at least earnings recovery, if not economic, since the economic growth has also bottomed out. Too early to say that, but IIP numbers for the month of November may be indicated that. On that note, I just want to pull up Avenue Supermarts. Darshan just highlighted there is 1.68 million shares which have changed hand, and this number is reading from Bloomberg. Remember, the numbers came in on Saturday. Not sure if the trading window now is closed for promoters to sell stake. That's a bigger overhang on the stock. Now the promoter stake as in December end quarter was somewhere about 79% something, which they had brought down from those levels of 80, 81. As per SEBI norms, remember, the promoters have to bring down their stake to about 75%. Besides Avenue, one more stock from the broader markets which has moved high is Redington. That's touched 52-week high, and it's gone up on very high volumes. The AVAT function of Bloomberg will just indicate that for you. There you go. It's at 52-week high, and just in the last 5 to 10 minutes, the volumes have spiked. The stock's also sitting with gains of somewhere about 16 to 17%. Hemen, on the charts, if you want to take a pick on any one of them, be it Redington or DMart, 18% high now for Redington. Would you take a bet?
DMart is the safest option because it's like Asian Paints and Nestle. Stock never goes down. If it goes down, it comes back stronger. 37 lakhs volume in Redington. That's huge, Navneet. But yeah, I'll plumb for DMart safer. But having said that, Redington, the monthly mechanical indicators are improving. We finished a correction. I guess not after a 20% circuit. Obviously, it's come off the circuit now. I think we are heading towards 165, 170 now in the next 3 or 4 months.
Okay, and the other nifty constituent which has gone up is GAIL. Pull up the chart of that one as well. Stock was up on Friday, and today as well there is some incremental gains. The stock's at days high, Ajit, at 129 for GAIL. What do you do from current levels?
So, Navneet, we are seeing the rebound after a long corrective phase, and considering the kind of buying interest that we are seeing at the lower levels, we believe this rebound will continue, and it can retest the level closer to around 200 EMA, which comes closer to around 138, 140 zone. So it's still a buy. In fact, one can initiate fresh longs also at current levels with 125 as a stop loss and 138 to 140 as a target.
All right, before we go on to what dealing rooms are recommending, I just want to highlight Inox. 394.159 now for Inox at the highest point of the day. 2% bump up on the stock, and this has been a good mover. Generally tends to move somewhere closer to when the result. It's time to announce the results. Last quarter, the high was about 385 post its results and post the strong momentum that it showcased on across the segment, not just content, F&B, advertising, everything that did well. And this time around, to making its approach towards 400 now for Inox. Time now then to take a look at what dealing rooms are recommending. Darshan Mehta, he's here with us to highlight what his channel checks are recommending this afternoon. Darshan, good afternoon.
Hi, good afternoon, Devina. One of the stocks that's been spoken about is Shree Cement. Most of the cement stocks have managed to do extremely well given the price hike that's come in. But on Shree Cement, it's trading at a 52-week high. There's a buzz of a potential inclusion in the Nifty the next time the revision does happen. So that's something that is also keeping the stock abuzz. The other stock is Bharti Airtel. It's up 2.5%. Today, I believe the dealers do indicate that the QIP list will be coming out, and dealers believe this time around the list is extremely strong, and that will come in. Apart from it, if you're looking at some of the movers that come in, GAIL was moving up, as you pointed out. Bharti Airtel has moved up. Idea has moved up, and this is because this week itself the Supreme Court verdict will come out on the AGR issue, whether they have to pay or no. So on the anticipation of a positive outcome, counters like Bharti Airtel, GAIL, Idea, all of them are moving up. And the last one is TV18, which is up almost 11%. Now we tried to find out, and it's moved up on decent volumes. Now remember, they will come out with the results tomorrow. We tried to find out, and some of the dealing rooms did indicate there is a potential buzz of a merger with Network 18, wherein all the media channels will be housed under one company. So that's the buzz that's moving on TV18, and that's why it's up almost 11%.
Wow. Thanks for that, Darshan. So that's an interesting
23rd Jan, that's when the court case hearing happens. The open court hearing was rejected, and they got pushed to 23rd of Jan. So that's when for Bharti and for most of the others for the AGR verdict, that's when it gets pushed to. Aside from that, I mean, we're talking about Shree Cement's possibility of coming to the index. It looks like Nestle, for one, when it came to the index, very thinly traded stocks. Look at the volumes. Shree Cement volume of 39,000, Nestle volume of 25,000. Yeah. So with all these companies coming into the index.
Here is the contenders who are actually can enter from the likes of HDFC Life, AMC. The problem is they're not in the F&O market.
Life, yes, not AMC.
Some of them which have been really performing well. And that's one condition for a stock to enter. And according to recent SEBI ban, NSE is not allowed to introduce new products, which also includes introducing new stocks in the F&O market. So there you go. Last 1 year, when we started the year in 2019, there were 200 stocks in F&O, and now it's just about 140.
But what does this do to the overall volume picture with such thinly traded stocks and in the cash market? Because these are supposed to be your most heavily traded stocks. I mean, obviously, F&O being the other point of it. But 25,000 stocks a day, 39,000 stocks a day for a Nifty 50 company. I mean, compared to the others, obviously.
Yeah, well, okay, so Dipan, why don't you come in on that, and then I have a couple of other questions. But this whole rejig of the index that might happen, and we're seeing off late, that it's not necessarily the most liquid name which is coming into the index. Dipan?
Yeah, I mean, I'm not getting the question actually.
No, Dipan, we're just talking about how...
Yeah, I'm not getting the question about the which company are we talking about?
Yeah, no, so the rumor mills have it that there is a possibility that even a Shree Cement might make it to the index. Now, we've seen that in the past that with a company like Nestle coming in, the volumes aren't exactly very high. So it's not necessarily the most liquid name. Shree too, the volumes are sub 40,000 shares right now as well. And it's typically been a low liquid stock. What's your view here on some of these low liquidity names coming into the index?
No, I mean, I cannot comment on what the index committee deems appropriate to include in the index or not. They have a very strong quantitative criteria for including stocks and excluding stocks. So if in their wisdom they feel that Shree Cement needs to be included, then so be it. I think one really cannot, comment on why these changes do take place. And frankly, we don't even track whether the stock is in the index or not. And our eyes are more glued on the profitability and some of the other fundamental aspects of a company and the industry rather than whether it was part of an index or not.
Dipan, just one quick follow-up on Bharti Airtel, simply because that stock is so active. It goes without saying that with the kind of demand that the QIP had, they would have had a chance to pick and choose the kind of investors who would come in. Of course, they do it at times on a pro rata, but at times there is some qualitative selection as well. You reckon that could move the needle on Airtel even more? The kind and the quality of demand that would have come in for the QIP?
Oh, I think gradually that removes a bit of uncertainty as far as Bharti, which is why the stock is reacting positively. And now I think it is pretty certain whichever way the AGR, the next expected so-called ruling, if at all, and whatever government concessions are going to come, whether they actually come through or not, I think Bharti Airtel is ready to pay the money. That is what the street is factoring in. And I think they are seeing life beyond this huge payout to the government as far as Bharti Airtel is concerned. And the fact that the third player, Vodafone, may be severely weakened because of this particular event, and they stand to gain market share. So I think this whole duopoly may actually come about, which is why I think street is very hopeful about Bharti Airtel.
Okay, time now to first get in some closing strategies before we talk about one more piece of news, which is maybe Dipan tracks the Network 18 group and can comment on what happens if indeed there is some merger announcement coming in. But keep in mind 2 or 3 things. One, that closing strategies. 2, Sobha, which was the Bloomberg edge for the morning. That stock is up 7% in trade, 6.8% on very high volumes. Well, the terminal threw up this chart pre-market today, and that stock is up 7%. But what are Hemen and Ajit talking about as a closing strategy? Hemen, to you first.
UBL.
1% stop loss, 2% target. I don't know whether it's a buy or a sell.
No, it's a buy. And with what Devina also said, positional buy on Edelweiss 25% in 3 months.
positional buy on Ilvais,
25
as per the charts.
25% upside in 3 months, stop loss 10%.
But the BTST is UBL. Okay, United Breweries is a buy from a BTST perspective. Ajit, what about you?
So Neeraj, I'll include Techem. After consolidating for almost 2 months, the stock is set for the breakout. In fact, the stock moved up today and with a decent rise in the volume. So it's like indication is very clear that we are set for the breakout. And 778 is a very small stop and upside closer to around, let's say 800, 810 is the target area.
Okay. Hemen, before we go to Dipan, just one quick word, an idea that you'd given, Shriram Transport Finance has done rather well. What more now? Would you take profits?
Well, if it was a intraday trade, I think yes, but about 1200, 100 bucks up.
Just want to pull up Dr. Lal Path Labs and Metropolis. Metropolis has been active in the last few days. Dr. Lal Path 2 has moved up, but somewhat stagnated in the last 1 or 2 trading sessions. Metropolis continues to do well. Today, again, it's up above 4%. So 1689, almost similar price points for both Metropolis and for Dr. Lal Path Labs. Dipan, diagnostics as a pocket has been active. We've seen a lot of interest, a lot of recommendations coming in. Do you feel that it's which one rather between a Dr. Lal as well as a Metropolis do you feel has a better potential?
So I think both stocks are overvalued compared to their growth rates, especially prospective growth rates and level of competitiveness and the risk that there could be government interference as far as the pricing is concerned. So I like to be a bit cautious. But these stocks have done exceedingly well, and a lot of strong hands have invested in these companies, and floating stock also is quite restricted, which is why we see these spikes in both Dr. Lal as well as Metropolis from time to time. But there is no denying that healthcare per se is in fine shape. But the better way to play it would be to the hospitals, and some of the hospital stocks also have done well, the likes of Apollo and Narayan Rudhyalaya. But I think that from valuation point of view, there's more comfort in some of the hospital companies. As I said, I think Apollo may be slightly overvalued, but tier 2 companies like say a Narayan Rudhyalaya or a Aster DM or a Shalby, I think Healthcare Global also, which could be on a turnaround situation. I think these may offer higher returns going forward if you take a slightly medium-term view of 2 to 3 years than the diagnostic companies, where I think they are priced to perfection almost with P multiples of around 50 times or so. And even a marginal disappointment could lead to a correction in stocks. Whereas hospital companies, I think by and large, they have finished their investment in new hospitals. A lot of the newer hospitals are now starting to contribute positively. You see this is the trend across the board in most hospital companies, that the newer hospitals are now contributing positively, and they have cut back on expansion, so that's going to be a drag going forward. So very positive on healthcare stocks, especially hospitals, and we do feel that these companies can give a 15-25% type of compound return over the next 2-3 years or so.
All right, Dipan, we leave it on that note. Appreciate you joining us and taking us through your views in markets. Ajit, would you advise people who are sitting on long positions on Infosys to book profit or to roll over the position?
So Infi, Navneet, the stock has filled the gap which it opened post results, I guess, on the day. So now we feel that this momentum can extend further. But since we have already seen a very strong surge of late in the last 3 trading sessions, one should definitely maintaining a trailing stop loss to curtail any notional losses. So 760 should be a stop loss, and 800, 810 is the area where we feel that stock may again witness profit taking a selling pressure. But that should be a target area.
Okay, let's start wrapping up the markets, and they are closing well, you would have to say, about 0.6% higher. So the ending on the day is not that bad, even though the Bank Nifty hasn't quite performed. And in large portion, this credit should go to the Nifty IT and Infosys in particular, which have ended well. The second most heavyweight index sector on the indices has put its hands up in the session today. Whether it lasts remains to be seen. The mid caps and the small caps also have not done too badly for themselves, about 0.9% and 0.76%. So the going has been strong today. Let's talk about the large caps first and see what's moving and what's not. Infosys up 4.5%, really strong show. The strength in IndusInd Bank today ahead of the numbers, a big pullback into the stock on which there was perceived weakness over the last couple of days. Coal India is up about 3%. There is strength in Bharti Airtel, late surge there. HUL, the big boy delivers. Britannia moves. FMCG has actually had a very good day. What's not done well? Yes Bank down about 6%. UPL, Bharti Infra, TCS are amongst the others which are not doing well. And RIL, has had a flattish move in the session today. But broader markets, as we said, have done very well for themselves. And Navneet, what is it that what is it that stands out? What is it that you're spotting?
Well, Neeraj, a lot of stocks moved around. There were a lot of sectors also in focus. And the rally that we've seen in the last 2 to 3 days, remember, broader markets have contributed significantly in that. And today also there was a slight outperformance. As you can see, mid-cap index is closing with gains of about 0.7%. So looking at individual stocks that, as we highlighted during the show, New India Assurance rallied in the second half of the session. So there was some buying which came in around in the last 1 hour of trade, and it's closing with gains of 6.5%. Besides IndusInd, you got Bandhan Bank also, which comes out with its earnings December quarter numbers tomorrow. Ahead of that, the stocks closing at the highest point of the day with gains of 5%. L&T Finance Holdings went up after UBS initiated coverage with buy rating, giving it a target price of 165, and the stock also reacted positively, closing with gains of 4%. DLF touching fresh 52-week high almost every day, one of the outperformers of the Nifty Realty constituent, that is. DLF up about 3%. Rennington we highlighted just in the last hour or 40 minutes of trade. There was some particular trade which took place. The volumes were really high, so 15% gains coming in here. Tata Global Beverages, what a move the stock has had in the last 1 month or so. This one too is trading at its 52-week high. A lot of long positions, by the way, coming on the future side. And also there is cash-based buying. Watch it for the delivery data. It's been on the higher side in the last few days. And the other stock which has been moving higher is NIT Technologies. Both on the cash side, volumes have been decent, and also future side, long positions continue here. And this one's trading above its buyback price of 17.25, so way above that now, 17.83. And Tata Elixir came out with the numbers reacting positively. Commentary also looking good, and stock closing with gains of 5%. You had a couple of losers. Kapadia Cement, an outperformer of last week, saw profit booking today. So this one was locked in lower circuit of 10% right from the word go. Adani Green has been witnessing profit booking after outperforming throughout last year. So this one was also locked in lower circuit of 5%. And something like Page Industries, this saw some bit of correction in today's trade, and the stock's closing with cuts of about 2 to 2.5%. Net, Davina, I think it's been a great start. We touched fresh highs, and it's a record closing coming in on Nifty.
Yet again, another record close for the index. 12,329 is where we are perched at. Nifty Bank up about 1/3%, not matching the excitement around the other names in the Nifty 50. Sensex up about 0.6%, but I think the bulk of the move came into the broader market space, like Navneet highlighted. Small cap index was up almost 1% actually. Coming to the point contributions, and then we move on to see the breadth of the market and how the turnover shaped up. But Infosys is the big contributor today, and just under it is IndusInd Bank, probably the only one within the banking space that held it up a bit. So 7 points there. What lost out was Reliance Industries, didn't do a whole lot much. TCS, remember the results come out on the 17th, so you're going to watch out for that one. ICICI Bank and SBI too looked weak today.
And talking about the market breadth, I think from the morning session itself, it was firmly in favor of the advances, and that was sustained, as you can see, throughout the session. 2:1 was the ratio that we saw. Also want to pull up India Wix, because as the markets have been inching higher, we've not seen India Wix cooling off, and the reason for that is we are heading into a very crucial period. That's the union budget on 1st of February. So India Wix also closing with gains of 1.5%.
Turnover, and that's the last variable that we're going to be watching out for, 32,000. So it's maintaining itself in the cash market turnover. The F&O slightly under, about 8.5 lakh odd crores. Closing comments from both our technical experts, Hemen as well as Ajit. Ajit, one crucial level that you're going to be watching out for trade tomorrow, or any stock that you'll be watching out tomorrow?
So, Devina, as we said in the beginning, that since the risk to reward is not favorable in the index for the fresh longs, but since we have almost tested the mark of 12,400, we have almost reaching that level maybe tomorrow. So I would recommend one should book profits, because that's the area where we have multiple resistances, not only on the daily charts, on the weekly charts as well. And in case if index manages to surpass that level, I feel that potential of testing 12,800 to 13,000 level also becomes very strong. So I doubt this is going to be like such a smooth sailing, at the beginning of the earnings season. So one should be very specific when it comes to the index, and book profit on every rise is what we are recommending.
Okay, book profit on every rise. Be slightly conservative. Don't stick to the trade for too long, is Ajit's advice. What about you, Hemen? What is it that you're going to be watching out for tomorrow?
A couple of gaps on the Nifty. It's not a rule, but markets have a tendency to try to cover these gaps. There's a gap on the bank Nifty also. It might make an attempt, but I don't have conviction of going short because, like I said, last week things were looking wobbly and we made a new high from a wobbly situation. The undercurrent seems strong, so I wouldn't like to trade the Nifty or the bank Nifty. There are a whole bunch of stocks, mid caps, small caps, large caps, over large caps. I think FMCG moved today, so a lot of stock specific opportunity, but I still feel these gaps, actually they don't get covered up. Frankly, think Devina, that's great. That's a sign of strength. This provides support. But yeah, I don't think it's going to be that cool. So stay away from the Nifty. And yeah, if it falls, I'll sell the put. Too many individual stocks looking good. So metals have turned 18 months after a long term. I mean, like it's all over the place. Looks good, expensive stretch, but good.
Okay, we leave it at that. Hemen as well as Ajit, thank you very much for joining us this afternoon. On that note, it's also goodbye from us here, the entire team of Countdown. Thank you so much for tuning in. Got the market wrap coming up next.